I grew a small account into 10K using a strategy that is mind-boggling easy. Like riding a bike with training wheels easy. And in this video, I'm going to dive into the charts and show you guys the exact strategy I used to grow my account to 10K so you can do the same. And also show you the exact options I took and risk management plan I used in order to make that happen. Okay, so we're in the Robinhood account. I just want to show you the proof real quick before we get to the actual strategy part. You can see way back the account was at like 1.2K. Ended up hitting a low of about 1.3, and then within the past week, when I took it seriously, peaked at 10K, and now it's at 8.4. I can easily take it back to 10K. But you can see really, really solid growth. In the past year, I didn't really even touch this for like the past month and a half. It was at like 500, took a few trades, grew it a little bit. And then I'm like, all right, let me take this seriously. And then in a matter of like two quick dips or two quick bounces, you can see 1.3 to 5K, small dip, and then 9.3/10K. Now it's at 8.4. Okay, so really solid growth. Really incredible stuff. And yeah, you're not going to grow this account risking 1 to 2% of your account per trade. I did grow aggressive, but I was in a place where I wasn't going to blow up my account. I had hedges, and I'm going to show you everything, how to do the exact same later in this video. All right, so I want to show you guys actually how easy this strategy really is, okay? Because I don't use any indicators, don't use anything, doesn't even use supply demand or any of that. It's just really, really simple. One little box here. It's a purple box. You can draw it as a level 2 if you want, but it works really, really easy. So here's how it works, okay? This is Amazon. Right now I'm looking at a 30-minute chart. It works on all time frames, but this is a trade that I did that actually turned this from 1.3 into about 5K, okay? So it's really, really solid. Basically what I did was this. What you want to do is go on a 30-minute or an hourly chart. Okay, so step 1, 30-minute hourly chart, and find what I call as a balance zone, all right? Now, a balance zone is basically when price is something like this, okay? Price is always going to be in a few different phases, okay? It's either going to be in a phase of consolidation, which looks like this, where it's very back and forth, very choppy, very uneven, or it's going to be the phase where you're either going straight up or straight down, okay? We have expansion versus consolidation or contraction, okay? Now, the key to this strategy is actually trading inside of this consolidation period, okay? Kind of trading within the range here, all right? And you can see in Amazon, even though we didn't end up breaking out here and we kind of dipped all the way back below here on this wick and came back below here, overall, you can see we have a pretty good balance zone here, okay? You can see we have a lot of equal highs, a lot of resistance in this 170 area, and we also have a lot of support in this 167 area. You can see bounce here, here, here. We have like 4 different times where price decided to bounce, okay? And now you may be thinking, well, Jordan, isn't this support resistance? Isn't it just trading the lows and trading the highs? Kind of. There's a specific way you want to trade it. I'm going to show you guys how to do that right now, okay? So we look at Amazon. What I can do is we want to zoom in on 5 minutes. So if we find our balance zone on the 30-minute or the hourly chart, we want to zoom in on a 5-minute or a 1 minute. Okay, that's what I personally like to trade. It's more of a day trading strategy. Also works on swing trading. But we go on a 5-minute or 1 minute. And here's the basis of the strategy. So let's say this is our balance zone here. I like to draw a box, just covering the edges like that. Makes it really easy. You can also draw levels. Doesn't really matter. But I'll draw like this. Make it purple. Okay, now once you have your box drawn, what you want to do is wait for actually what I call a false breakout. Okay, so a lot of times price is going to do one of two things, right? Eventually buyers and sellers are going to give up. One side is going to go, and let's say for this example, the sellers give up, price pushes up. Now, two things are going to happen here, okay? Price is either going to break out, or price is going to try and break out, fail, and then end up coming back short, and then dumping a lot lower, okay? The trade that we're looking for is this short here. Quick interruption, guys. So this video is more about flipping small accounts. And if you actually want to learn how to trade a real account properly and become a full-time trader with long-term growth, check out the link in the description. I made a completely free training video showing you the 3-phase system I use to become a full-time trader. Back to the video. This failed breakout and short strategy works so well and it's so easy. And it works on pretty much all time frames. And this is the strategy that I use to actually grow this account. So let me show you, go ahead, an example, all right? So you can see here, before this price action even happened, this was the zone I had drawn, right? I could actually move it a little bit higher if I wanted to. But you can see we have a lot of resistance in this area here, this 170, a lot of support here, right? Now we had a few times where price would go back below it or go back above it. But ultimately, you can just see with your eyes that we have an equal high and equal low here, all right? Now, if you want a quick tip as well, what you can do is throw in the volume profile indicator. That will kind of help show you what it looks like. So you can see that I have the volume profile on. You can see now how we have like kind of at the edges of these pockets where there's just very low volume. That's where the edges of your zone is going to be, right? So we can see here would be the bottom, and then you can see up here we kind of have this little edge here. That would be the top. So in between is going to be your zone that you're looking at. It's going to be your balance zone. So quick tip, you can use volume profile if you want. Personally, you don't really need it. You can just look and see that there's equal highs and equal lows in an area and use that. So how does the trade actually work? Well, if we go to Amazon and a 5-minute, we're actually going to go to a 1 minute just because it's a little bit easier. Now the trade I took was actually right here, right? So what happened was price came back down. What happened? We went below our balance zone. So we tried to break down, okay? So price right here tried to break down. Now typically what you can expect in this balance zone is that a lot of retail traders are long, okay? And so when price goes back below that support, you're going to expect them to sell. And you're also going to expect other shorts to add on when price goes down as they're taking a breakdown trade. But what's interesting is that didn't happen, right? As price came back down, we actually bounced all the way back inside of the zone. We had a really strong rally off of this low here. And that tells me two things. One, the people who shorted in this area are now going to get squeezed. They're going to have to cover and buy price back. And the people who were originally long, who now got stopped out, they're going to want to get back in long because they see it actually held their support zone, right? So that leaves us with the conclusion that price is typically going to go back to the other side of resistance, okay? Price, like I said, is always going from lows to high. If we're stuck in that balance zone, we're going to continue to go from low to high until buyers or sellers give up. You can see here, it looks like buyers tried to give up in it for a second, but they actually stepped in. It was more of a fake out. New buyers came in here. When price gave it one more pullback here, they ended up pulling it again, and the price went right to the other side. Okay, price just goes from low to high, and it does it time and time again. Okay, so what I did for this trade was I waited for price to actually bounce back inside of the zone, and I waited for a small pullback. So I got in long around this area here on a pullback. My stop is going to be right below this low, so I can bring it up like this. Just like that, stop was going to be below that low, and I targeted the other side of that balance, that resistance area, just like that. It was about a 2.6 hour trade, but with the way you trade options, you can get a lot more than 2.6 hour, and I'll show you that later in the video, okay? So that's the strategy. It's really simple, it's really easy, and that was the first trade I took on Amazon that actually brought this up to 5.6K. Now, the other trade I did to bring it up to 9K/10K was the same exact strategy, just on a higher time frame in a different stock. So let me show you AMD. So if I zoom out, we go on like a 30-minute and hourly. You can see AMD has the same exact setup here. So let me get rid of some of these levels. Now, AMD has a really nice balance on here, right? This one, it might be a little easier to see on a 4 hour. As you can see, we have support here, support here, support here, resistance here, here, and here, okay? Very easy balance zone, very back and forth. It's very obvious to tell that we're kind of in this back and forth consolidation phase, and we were previously in this, expansion phase, right? We go to expansion, then we have consolidation, and we look for another move of expansion after that. But for this trade specifically, it was more on a 4 hour. And so what I did was I went to a 30-minute, and I traded the same exact thing, okay? So I saw that price came down right here, right? We went below this balance zone, right? We tried to see if buyers were present here. And what happened? Buyers were present, right? So price came down, buyers were present here. And as I saw that price come back into this purple, so buyers were present here, and as I saw that price came back into this balance zone here, into this purple area, that's when I decided to get long, okay? So I decided to get long here. Now, price did pretty much just barely wick out this low here. I gave myself a little bit more room down to here. But you can see as price came back down, the next day was entire consolidation. I was down a little bit. This was this day here where I was like, I went from 5K down to like 4K. And then boom, we get the huge gap up. You can see price just immediately gaps up the next day. And I sell everything at my target as price comes up to this high here. And then that's it. The trade is done, and that is it, okay? Really simple setup, really solid strategy. You simply just draw a balance zone. You can see you could have done it a few other times here, right? When price failed to break out here, then you look to get short there, and then boom, you trade it down the other side, right? There's a lot of opportunity just in this picture here that you could have used to actually trade the strategies well and help grow your small account. Okay, so when it comes to the actual options that I trade and the risk management plan behind this, I was going aggressive with the account, okay? But I also had some hedges. I'll show you guys that in the video in a second here. But if we take a look at Amazon, I go on like a 5-minute chart. Now, the options that I got on Amazon were the 170 calls. Now, these were a little bit risky, if I'm being honest, because I got in here. I was expecting price to go all the way up to 170. And the goal with the options you want to get is that you want to have them start out of the money, but be in the money when you're at your target or in profit. So you want to be able to, take that IV bump from when options go out of the money to in the money and allow that to actually happen to you, okay? And so that is going to allow you the best opportunity to trade, okay? Now, if you're trading on a daily time frame or like a 5-minute and 1-minute time frame like this, and you're expecting the move to happen in a day, then you can get with a weekly. So weekly out of the money, I will say the 170s was a little bit of a stretch. Typically, I go a little bit safer. So I could have gone with like 169s, maybe 167.5s. I don't remember if the options were by 2.5 or by 1. But either way, out of the money, have your target be in the money. That is the best way to get the most IV and the most bump from your premiums when trading options. Okay, if I look at AMD, the same exact strategy I traded with this. If I zoom out, AMD, I ended up getting the 175 calls. Yep, so price came back down here, it was at 164. Price obviously rallied, 175. I was in the money. We were like 5 points in the money at my target, so it allowed me to catch that move and also be in the money at my target to get that bump, okay? And doing trades like this makes it really, really easy, although you have to be aware that you can lose a lot, right? And the risk management aspect of this is really, really important, okay? So let me just draw this out for you so it makes it really easy. So you want to do weekly options if trading, 1 to 5 minute time frame. Same thing with AMD. I ended up going with the weeklies. It was on a Wednesday or it was a Tuesday, so I had like 3 or 4 days for this trade to work out. Now, if you're trading on a little bit higher time frame than that, then you can go with like a next week contract. Those are also going to be really good. But this is what I do, just like this. And you want to also add in go out of the money, but be in the money at target. Okay, and you want to be a few strikes to the money if possible. I didn't do the greatest job with that with Amazon. I was pretty much like right at the money, pretty much at my target, 170, target was at like 170.3. I really should have went with something better. That's typically what I recommend for the strategy. That's what I did with AMD. I would have been, at least 5 points in the money with the 175 strike, okay? So write this down, keep this note. Now, when it comes to risk management, it's really, really important that you do something smart about it, okay? So with AMD, the first thing I did for risk management was a hedge, okay? So I want to talk about hedge, basically how that works. So while this was going on, basically AMD, the next day when price dropped, and we were consolidating basically the whole day, I told myself, you know what? Price may dump. I was in with a decent chunk of my account. I want to be able to hedge. And so what I did was I bought about $400 worth of puts expiring that week. So I was basically taking into account if price dumps on me, as long as I have that hedge, I'm not going to blow up my account, right? And this is what I recommend you do if you are trading this strategy, okay? Because remember, think about it. Price is either going to do one of two things, right? If we are in a balance zone, just like this, and the price ends up breaking out or below one of the zones, right? Just like this, two things are going to happen, right? It's either going to continue to break out or we're going to reverse and go back to the other side. And so we're banking on the fact that price is going to reverse and go to the other side. And if we're wrong, price is going to dump. So if you're able to get a decent chunk of your portfolio in those calls, and that's what I did. I put about, I forgot exactly, a few thousand into the calls here. What I also did was get about $500 in a hedge, and I bought puts, okay? Because I felt if I was wrong, that means price would go the other way, and I'd still be able to hedge my account and not blow up the entire account. Okay, this is a much more aggressive strategy that I went with risk management. This is not how I grow my normal account. Okay, normal account, how I typically trade my large account, I risk 1 to 2% of the account per trade. Okay, when I'm doing a small account, I don't do it like that. I like to be more aggressive. I like to give myself a hedge and say, you know what, if I'm wrong, I'm still going to have that hedge. And the worst thing that can happen is price kind of stays neutral. And the edge with the strategy, the reason why this works so well is because of how this works and the nature of how price and stocks actually move is that it really won't stay neutral around this area, kind of that bottom of the edges, for a long time. Okay, it only did it for a day here, but most times it's either going to break out or it's going to reverse the upside. You can lose, it can stay there, it does happen, but the edge is in our probabilities that it won't happen. Okay, and that's how we're able to manage risk while grow our small account extremely quickly at the same time. And I've done this for numerous small accounts. You guys can see on my Twitter. I've done it all over, and it works extremely well. So I hope you guys enjoyed this video. Go ahead and click the link in the description to watch my completely free training going over my 3-phase system of trading, and that will, guys, help you out to actually become a profitable trader in the long term, not just try and flip small accounts like I kind of did in this video here. Okay, so go ahead and check that out for a real training there, and subscribe to the channel. Hope you guys enjoyed. I'll see you guys in the next video.